Hello friends, welcome back. I am CA Pritish Burton. Today we are going to deal with the topic which is the talk of the town, cryptocurrencies. Everybody wants to invest in cryptocurrencies, but you need to understand the basics of cryptocurrencies. So without any further delay, let's get into it. Now let us understand what is cryptocurrency in simple terms. Cryptocurrency is a digital or a virtual currency which is secured by cryptography and uses blockchain as its technology. Do you all know how goods were bought and sold in the olden days? Through barter system. That is, goods were exchanged for goods. After few years, this barter system was replaced by precious metals like copper, gold, silver, which was used as money. Even this became impractical because it was not possible to carry these metals due to its weight. Later, we had coins and paper currencies. And now we have gone one step further. That is, we have cryptocurrency or digital currency. Now let us look into the difference between the real currency or physical currency versus the cryptocurrency. Let me give you a simple example. I have 500 rupees note in my hand, and in this case, it is guaranteed by the central government. I can see it and I can feel it, and that is the reason people accept it as well. Whereas cryptocurrency is a digital currency, you cannot feel it or you cannot see it. It is in the electronic form. Cryptocurrency is not issued by any government. Government has absolutely no control over cryptocurrency. And moreover, it is important to note that the physical currency that we have can be counterfeited. But whereas in case of digital currency, it cannot be so. Now let us look into some of the major cryptocurrencies that are in market circulation. First one is the father of cryptocurrency, which everybody knows, Bitcoin. Bitcoin was launched in the year 2009 by a person named Satoshi Nakamoto. Bitcoin represents almost 50% of the cryptocurrency that is in market circulation. The other major cryptocurrencies are Ethereum, BNB, XRP, Matic, and many more. Now it is time for the most important question, cryptocurrency as an investment. In the year 2021, more than 10 million crypto investors have been added in India alone. In India, cryptocurrency is not a legal tender, but it is not illegal. It is not crime to have cryptocurrency as an investment. Illegal tender means you cannot use cryptocurrencies in order to buy and sell anything. Now, what are the factors that you need to look into before investing in cryptocurrency? The first one is total supply and circulation. Check the total supply that a particular coin can have. In case of Bitcoin, the maximum coins that can enter into a market is 21 million. But there are certain coins that can enter into the market in infinite numbers, which is not good. The second factor is the uses or technology of a coin. For example, Bitcoin is used to buy items from people and companies that use Bitcoin as a way of payment. Whereas the use of Ethereum is smart contracts, which is used in financial or banking sector in order to make the transactions faster. The most important point is that you do not invest in a meme coin or a penny coin. Another important factor that you need to pay attention is the people behind a particular coin. It is very important to see who has invested in a particular coin or who is behind the technology. The next question that comes to everybody's mind is whether cryptocurrencies can be converted into cash. The answer is yes. How do you do it? Through crypto exchanges. Just like we have the stock exchanges, we have crypto exchanges as well. The major crypto exchanges are Coinbase, Binance, KuCoin. There are some crypto exchanges in India as well, namely WazirX, Coinswitch, and many more. In case of stock markets, you can trade only from Monday to Friday. But in case of crypto markets, you can trade all the 7 days of a week. Also, crypto markets are open 24/7. Now the last and most important aspect is the taxability in case of cryptocurrencies. The income tax department has not issued any clarification regarding cryptocurrency taxation, but as far as my understanding is that cryptocurrency is a capital asset. If you sell cryptocurrency within a period of 3 years, it becomes short-term capital gain, which will be taxed as per your slab rate. In case if you fall under the 30% bracket, even the short-term capital gains will be taxed at 30%. If you sell after 3 years, it becomes long-term capital gain, and the gain that you have got will be taxed at the rate of 20% with indexation. But as there is no official clarification from the income tax department, major investors in cryptocurrencies are offering their income or capital gains from cryptocurrencies at the highest rate, that is 30%. So friends, thank you very much for watching this video. Stay tuned for more interesting videos and happy investing.